Thank you for tuning in to another edition of the Vulcan Report. This report is for trading on March the 17th, Thursday 2016. The one thing that we're going to want to look at right now is the emini S&P 500 futures contract. As you can see, we are trading now above the trend line support. Nice pulse wave due to yesterday's FOMC deciding that they were going to instead kill the housing market and stimulate the stock market, sending prices higher. As indicated in the previous video, unless the Fed does some kind of stimulus, the overall equity markets globally were doomed. So the ECB and the FOMC decided they were going to get together and make this happen. So you can expect higher interest rates, which means that they are still feeding you that the economy is getting better and can sustain such a thing. So they've taken the negative interest rates off the table. All right, that's what they say with their mouth. Here we're in the overbought but locking in position, where the market now wants to make a run to the 2100 level. We should be able to do that within the next 3 weeks. Taking a look now at what has happened in the crude oil markets. Crude oil is breaking out as well. Who would have thunk it after this market has been so suppressed for so long here? Alright, wants to make a run here. The trend line resistance of $45.47. We'll see if we can hit that. One note of caution is that this trend line support is right underneath the bottom of the cumulo cloud of death, and that's going to act as a very strong resistance. We could just get here and fail and crash back down below 26, or it could break through it and gather legs and push us way up to 70. So that's what we're looking at right now. First stop though is going to be resistance at 60, and if it could get enough people on board, we can push 70. Alright, taking a look now at what has happened with our US dollar here at home. As you can see, as I warned before, we're now trading well below the trend line support. The bull market is starting to come to an end. Trend line here is starting to curve down. Looking at a cross here within the next, I want to say 3 to 5 weeks, we should be fully crossed down, well inside or below the cumulo cloud, as this price action is starting to accelerate toward the downside. We did hit a low of 94.70 already in this market, so not looking very good as this market starts its bear run. You can see commodity prices such as oil and soybeans and whatever go through the roof, and that's what it was needing and waiting for. So high ho silver, right? Gold and silver, the metal should get a boost from this too. All right, let's see what's happening with the metals. Looking at the gold market first, this is boded well for it. Nice bull upward thrust. All my prior videos back when we were down here telling you that we were going to go here. It's panning out. Next stop 1300, before we will sit back and see where we go from there. But we started here, and now we're going to go here. Alright, one thing that I wanted to point out again was, if you remember, we started off here, around here, and then we quickly shot up to here, and then we went further to here, and now we find ourselves here. So that's pretty amazing for us to have done so. Wouldn't you agree? I think so. So the good thing about the market is that when you take a look at the longer term picture and you take it, step by step, you can see how much you've evolved. You see how the technical analysis pans out and shows you what the market is doing and where it's going. Okay, so let's see. Silver has a little bit more to do here, as it's been lagging the gold tremendously. It's not even outside the cumulative cloud of death yet. It's pretty much just midway in it. So it still has to push up out of this cloud and get up to 17 to catch up to the gold. So we still have about another, I want to say $2. We're lagging by $2 behind the gold. It should be up at least up to 17 by now, but it's not. And again, let's see here where we started. All right, we started here. Okay, and we started looking at this thing. We were up in here. Then the market broke out here. All right. Then we managed to break into the cloud. Our initial break into the cloud was here, and we built support right here at the base here of the trend line support. All right, so we broke out, retest, built support here. Then we broke out again here, and now here we are right here, and our initial target is going to be here. All right, so this here marks the initial target up here. All right, this is where we're headed in the silver. All right, so we're trying to trend up here. The market's trying to turn up. We'll see if we can make that happen over the next. I want to give this marker another week. It should be able to break out of the cumulative cloud and close above this cloud by next week. All right, and let's see here. Something else I wanted to look at. Oh, I want to show you something. Show you the effect of the dollar crashing and how it's playing out in the other commodities. Take a look at soybeans real quick. Soybeans was flat, man. Dead market. Look at that. Doing absolutely nothing week after week. Just flatlined. An actual flat line. Look at this. This is months of just going nowhere. Just nowhere. Flat. Dead market. Waste of money. Now it's trying to get some legs here, and it's trying to break out. But once again, its trend line is right below this cumulative cloud here, and it's going to act as a very strong resistance, and that's at 922. Alright, so you got a 22-point run from here, from 9 to 922. That's not bad, but even still, you got to watch it and see, because depending on what kind of crop reports come out and what's happening in that commodity space, which is something I really don't follow as far as the fundamentals go, this thing could go from here to 1200 in no time. These markets, these grain markets, can be quite dangerous. They can have lock limit moves, and you got to be careful when you're trading the commodity futures that have lock limit moves. If you've never experienced it, I can tell you it's a very painful situation. I have experienced it before many years ago when I first started my journey. I remember being in the market, and then it opens in a lock limit move, and if it's in a lock limit either up or down, it means that it won't move anymore in that position, and you may not be able to get out of your position. So just remember that if you're short and the lock limits up on you, you can't get out, because the only way to get out of a short position is to buy something, right? And if it's not accepting any more buy orders because the market's in a lock limit up move, you're stuck in that short position. And if you're trading the big futures contract, that's $50 a point, and back then the lock limit move was $1,500. So you're looking at $1,500 loss per day for every lock limit move against you. And back in the historical days of the 70s, the lumber market was notorious for locking limit for weeks at a time. Fist fights and stuff and brawls breaking out. So can you imagine being locked in a market lock limit every day for a month, and you're losing $1,500 a day per contract? Yeah, ouch, right? So anyway, Just be careful with those. Grains are not thinly traded though; they're extremely liquid. So that's the good thing about it. You can get out with those grains, but like the lumber markets and some of the other markets, they're a lot more thinly traded. You have to really be careful. That's why I really don't operate in those markets. I'll play grains all day, but coffee, soybean, I'm sorry, coffee, sugar, the cattle's live cattle, feeder cattle. Those, I mean, those, don't get me wrong, those are great markets to trade when they're really in powerful trends, but they're thinly traded. And so things can happen like slippage and stuff like that. So you just have to be careful. The only thing I really venture out into trade is gold, silver, and soybeans, wheat, and corn, but mostly soybeans from the grains, just the metals and soybeans. That's about it. Soybeans does trade like the S&P 500 when it's running. It can really get moving. It can be volatile at times too, even though it hasn't been. As you look at this chart, it's been rather quiet, flat, even. But you see here, you got action. But historically, this market is just like the S&P 500, so you got to be careful. All right. So with that said, bulls make money, bears make money, but pigs get slaughtered. Remember, take what you can, give nothing back.